Is the Toronto real estate market crashing? In this video, I'm going to cover the Toronto real estate market report for July of 2024. We're going to go through what's been happening in terms of interest rates in the Bank of Canada, the economy, employment rate. We're going to talk about the forecast for the real estate market in the coming months, especially heading into the fall. We're also going to discuss what buyers should be looking for in this market, what sellers should be looking for, and also don't forget to stay till the end. I am going to pull up some reports. So we're going to dive into the numbers, dive into some homes that are on the market, and really make sure that you have an informed uh, update on what's going on in the real estate market so that you can make an informed decision whether you're looking to buy, sell, or rent. Stay tuned. My name is Tish Schoberg, and I'm a licensed real estate agent in the Toronto and surrounding areas. Now, if you're looking to move in the next 9 days or 90 days, feel free to reach out. We'd love to help. I've helped more than 100 clients to buy, sell, and rent in the GTA and surrounding areas. And I've also lived in Toronto for more than 20 years, both born and raised. So for anything Toronto, be sure to reach out to me. I'd love to help. Also, be sure to like, comment, share, subscribe, and turn on post notifications. So as I mentioned before, we're going to talk about the Toronto real estate market for July 2024 and kind of what to expect moving forward. So stay tuned. So first, let's talk about interest rates. So the Bank of Canada has cut their key interest rate in June and in July, both at 0.25. So I've had a few buyers reach out to me saying, Tish, why has the market not become more normal after two rate cuts? Why are things still so slow? And the reason is because two rate cuts, especially ones that are just at 0.25, is not enough to have that big of an impact on the real estate market. It still isn't going to help buyers to qualify for that much more of a mortgage. And so it isn't going to be until a few more rate cuts, which we are expecting the Bank of Canada to continue to cut rates in the next coming months, that we're going to really see upward pressure in pricing. In fact, there are some areas that have actually seen a reduction in price, which you will see at the end. I'm going to pull up my graphs and my data on what's been happening from um, you know this rate cut to now, and you're going to see that there hasn't been that much of an increase in price. There hasn't been much of a reduction in price. The market is still very much normalizing. So I want you guys to understand that the interest rates are going to continue to go down for variable rate mortgages as the Bank of Canada continues to cut the rates. Because the inflation rate is been lowered, it's now at 2 point, I think it's at 2.7 now. Um, that is beginning to satisfy the Bank of Canada's goal of curbing inflation. We also have the employment rate, which actually came up a little bit higher than expected, and that's also impacted the Bank of Canada's decision to continue to cut rates. So they do have another meeting in September. I do think that they will be cutting the rate again. Probably not a substantial cut, maybe zero point 0.5. Let's cross fingers, right? I mean, I'm definitely here for more buyers being able to enter the market. You know, people who are on variable rate mortgages having some lowered pressure with their current mortgage. A lot of people also have mortgage renewals that are coming up. So just making sure that you know, hopefully they continue to cut rates in the next coming months, and I think it'll just be better for everybody. And I definitely foresee that coming and happening in the next coming months. So let's talk about the disadvantage to buyers in this market. And so the disadvantage is, you know, if you decide to wait to buy a home when interest rates go down in the fall, you are going to have an increase of competition. And with increased competition, you have less favorable terms that you're usually able to put into the agreement of sale, and it's harder for you to be able to negotiate the price, especially if there are three other competing offers. We are also going to see the marketing strategy change, so we're going to see more houses that are holding offers as there becomes more buyers and less inventory. So, you know, the same home that you're looking for in this market may be $20,000, $30,000 less than if you were to wait until, you know, further in the fall. So there is a significant advantage right now, but the disadvantage is potentially paying more and having less favorable terms if you do wait. Another thing to keep in mind. So I know I already touched on I'm excited for buyers in this market. This is an exciting market for buyers. But I really want to just do a deep dive for you buyers because there's so much opportunity currently in this market. My buyers are getting some great deals. One of my families that I've just helped, they just secured a home, got $65,000 um, off the listing price, off the asking price. I've had other buyers that have gotten $30,000 off the asking price. So it's a really great market to be a buyer. Okay. And I will touch on sellers very shortly because it's not a bad market for sellers either. But for buyers right now, you have a significant advantage in many areas across Toronto and the GTA. So one of the advantages right now for buyers with this increase in inventory is you get to have more opportunity to negotiate. So you can negotiate on pricing. You sometimes can come across a home that has multiple different comparables that are currently active on the market. So this allows you to have more room to negotiate and kind of compare the two properties and compare the pricing and provide an offer that is more favorable for you. You also have the opportunity to provide an offer that has more favorable terms, like a like a condition of inspection, a condition of financing, um, condition of repair, which is things that we didn't see when the market was very overheated. So with the increase in inventory comes more opportunities for you as buyers to have more variety of homes to choose from, way more negotiation power, and you also have an opportunity to buy a home on your terms, which is extremely important. Another thing that we're seeing in this market is the condition of, buying with my home selling, right? So if you wanted to purchase a home, but wanted to ensure that your house currently sells before that agreement of sale becomes firm and binding, you have the opportunity to do that. So that's something again that was really unheard of when the market was overheated. So buyers have that significant advantage right now. So let's talk about the disadvantage to buyers in this market. And so the disadvantage is, if you decide to wait to buy a home when interest rates go down in the fall, you are going to have an increase of competition. And with increased competition, you have less favorable terms that you're usually able to put into the agreement of sale, and it's harder for you to be able to negotiate the price, especially if there are three other competing offers. We are also going to see the marketing strategy change, so we're going to see more houses that are holding offers as there becomes more buyers and less inventory. So, the same home that you're looking for in this market may be $20,000, $30,000 less than if you were to wait until, further in the fall. So there is a significant advantage right now, but the disadvantage is potentially paying more and having less favorable terms if you do wait. Another thing to keep in mind, so sellers, I know it's been a less favorable market for you. Most of the areas in the GTA and in Toronto are dealing with a more balanced market or even a strong buyer's market, especially in the Toronto downtown condo market. So one of the advantages that you have in this market is being able to really stand out against other current homes that are not marketed right, because there's a ton of homes, which I'm actually really shocked to see, that have not been priced correctly, that are not offering, a really great compensation to a buyer's agent, that don't have professional photos, that aren't using paid ads to help market the property. So there's just a lot of inventory on the market that's not being properly marketed. So if your home is properly marketed, it will definitely stand out amongst the crowd. However, overall, that increased housing inventory is making it a little harder for you to sell your home. One of the advantages that I'm seeing for sellers in this market are for sellers who are looking to upsize. They typically, if you've owned your home for 5+ years, you have usually some type of equity in your home, at least 100K equity, depending on where you bought. And so you could actually leverage that equity to upsize to a bigger home, because when the market becomes more active again and becomes more normal or potentially overheated, the homes that are a lot bigger, like those detached homes that are like 2,500, 3,000 plus square feet homes, those tend to appreciate at a faster rate than a smaller home. So if your current home, whether it be a condo or townhouse or condo townhouse or semi, has seen some appreciation in the last couple of years, you may have a significant advantage of upsizing despite the market being a little slower, because you can take advantage of the fact that the luxury homes and the bigger homes right now are pretty much on sale. So, it's important to really understand your home's value. And if you want more information on determining your home's value, be sure to reach out to me. I'm happy to provide you with a free home evaluation to give you some more insight on where your home's value sits and also to discuss what recently sold homes have gone for in your area.
So, is the Toronto real estate market crashing? Let's take a look at the numbers and see. So, we're going to head over to my website and we're going to click on the full real estate market report for July of 2024. And we'll look at the numbers and determine if the Toronto market is truly crashing. So based on the real GDP growth for Q1 of 2024, there was a 1.7% increase. Toronto employment growth as of June is 1.4% increase. Toronto unemployment rate has actually been reduced by 7.8%. Inflation has also been reduced to 2.7%. The Bank of Canada's overnight rate has gone down. So the Bank of Canada so far has done 2 rate reductions, both in June and July of this year. And so when we look even further into the numbers at the average price home and the difference in terms of pricing from last year, we can see that in the 416 for detached homes, there's only been a 0.5% increase. Semis, there's been a 0.4% decrease. Townhouses, 0.9% decrease. Condos, apartments, only a 0.5% decrease as well. So, I mean, a 0% decrease to me is not really showing a market crash, right? So, because the market is slower, and this is really common because of the market normalizing with the rapid rate increases we had the last couple of years, and it harder now for a lot of buyers to enter the market and qualify, and with mortgage renewals that are happening, and there's more inventory with people trying to sell and more investors that are trying to sell as well right now. We have a lot of inventory. Yes, we do have a lot less buyers in the market. Yes. And because of that, it's causing the market to operate at a slower pace, but the market is not crashing based on the numbers that I'm seeing here. When we look at the year-over-year summary, percent change in sales is at 3.3%. New listings are up in whopping 18.5%. We have 55.4% more active listings this year in comparison to last year. So again, a lot more inventory, right? A lot of that inventory, again, is because of the increase in rates and a lot of people just wanting to sell. Average price point overall has only gone down by 0.9%. I mean, it's laughable yet. Some people think that the market's crashing considerably, right? Average LDOM, so 41.2%. Average PDOM, 56.5%. Okay, so it stays on market. So to me, this isn't really indicating that the market's crashing. If you do think that these numbers mean that the market's crashing, then I mean, that's completely subjective to you. But to me, these numbers don't mean that a market is crashing. It really means that a market is normalizing. And what we're expecting to happen, usually after a rate cut, then 6 to 12 months, we do start seeing the market really becoming normal and picking up. So as we see more rate cuts happen, which there are expected to be more rate cuts, especially in the coming months, with inflation just continuing to lower and stay within the Bank of Canada's target rate of 2%, we are going to see more and more buyers enter the market. We are going to see more and more activity, less inventory. So again, if you want more information on, understanding your home's value, understand recently sold listings in your area, or wanting a list of homes, be sure to reach out to me. I am a local real estate agent and would love to help. Also, be sure to share. That's funny, I said care. Like, share, subscribe, turn on post notifications, and have a wonderful day. See you in the next video.